Good morning. All right. Well, I have to say the bias this week has been spot on, with the title. I guess it was yesterday or the day before. I kind of forget day to day. Don't be the frog in the blender. And, it's just factory work. We recognize where the charts are, the trends, where support resistance is. And, it just based on the alignment of multiple timeframes, it made sense that the market would begin to try and correct a little bit, not violate the trend, but, the momentum was slowing down. And one of the things I mentioned was that turn days or areas where a turn can happen are very erratic and choppy. And that's exactly what we've had. So, I like to say it is what it is. We prefer when there is momentum, either up or down. It just makes it easier to make money when there's that momentum and things are trending, especially in the market. There are times like that. Dan might mention this apron that he pointed out to everybody yesterday. That was like, a monster move for one day. Kind of fell back to earth a little later in the day. But, when things are moving, and you pick your spot, you get on and, things trend, and it's relatively easy, kind of like what we call painless trades, where things just continue to move or retrace very little. But when things get to a point where, they are right now, where they're in an uptrend, and let me just get my little drawing thing out here. I explained maybe even last week, I know this week, what the hell is that? Hold on. I don't know if this is going to draw like that. Anyway, there we go. I explained that this was the start of the move. And then what we do is we just look at the following moves. And then once things begin to stall, not end the trend, once they begin to stall, how far did they get from the last time they stalled? So this stall was a little consolidation. This one was a little pullback to minor support, the prior high. And then it went up again, and about the same, maybe a little bit less than that one. And now the greater than 100% retracement concept tells us that prices are likely to begin to stall in their momentum. And that took a little while, and, it has. So now the next move up was even shorter. So we can see that momentum is slowing down. It doesn't mean the trend is over. It would have to break down below here to violate the trend, but things are beginning to roll over here slightly, and we'll see if they can hold this area. But it just makes it more difficult for intraday trading when things are at a point where you can see here on the hourly that they begin to, this is the couple of days of rolling, and now we'll see if it can break down through here, whether it goes down today or whether it just chops around. So we sit there and wait. As I explained yesterday, we look for clues as to whether one market might lead the other. And interestingly, yesterday, the Russell finally got moving. The others didn't follow. And here's the futures. You could see they popped up there, and it looked like the other markets were going to follow, and they didn't. It fell back to earth. And the Russell that we've been looking here, those are the futures, but we've been looking for this to possibly break out above this little range. It just went back down to the bottom of the range. So we still don't know. Maybe today it gets back up there, or whether it breaks below here, which will open it up into this little void below to drop, and this head and shoulders type of top here, just because of the market, the other markets are up at new all-time highs. I was thinking maybe this can get negated and could play catch up and lead the way up. So we're still dealing with the uncertainty of the chop that's going on right now as the market waits for whatever, I guess, earnings. Banks are, they've been coming out, haven't got the markets moving. So I think Microsoft actually reports later this week. I forget which day, but that could be a market mover, so we'll see. The transports here, similar type of pattern with this, not exactly, but similar with this head and shoulders, which thought maybe, is it going to break here? But this is negating it. It's still not completely out of the woods, but definitely a great improvement to supportive of the market. Alex is telling me something in the chat room that it's on Thursday. So just be aware of that. So this is looking good, but this CSX is getting shellacked this morning, breaking down through some support. I saw it earlier. I don't know if it's in this list here. It was before. This is kind of like a moving thing as things become more active and less so. Okay, so whatever, you can look at it at your own time. But believe me, it's down. That's not good for the transports. So, we're just waiting here for things to find a direction right now. For intraday, it looks like, since we've got this little double top on the hourly and so far it's holding its support, if it could break down here, maybe we get some intraday shorts on the indices here and in the futures. So that would not violate any trends in the daily or weekly time frames, but we get a little pullback and then we just see how things hold up and then where we go from there. Qs, same story. You can see the move up, the roll over, lower high here where maybe they come down to this 78.95 area. And if they don't hold there, well, it opens up the door, to considerable area down below, which still wouldn't violate the trend. But the deeper prices retrace from the swing low, right? The swing low here, and then it makes a new high. The deeper it retraces here, the more it puts the trend in question. Really just common sense thinking, because when the trend or demand is strong, the trend is strong. It makes a low, it goes higher, it pulls back, down to minor support. Sometimes they just go sideways like this did and then go higher, but they typically don't come all the way back down to what we call major support, the low prior to the higher high. So we're pretty much in a wait and see mode here, avoiding to be the frog in the blender, staying out of the chop, and waiting for waiting to see if things begin to change here. And as I said, from an intraday trading point of view, we can take advantage of moves to the downside, which looks like they are in order. They just haven't triggered yet. They are in order for some kind of a pullback since they've been going sideways here, and that is an example of distribution. And we can see the little breakout that didn't follow through and it came back in, it didn't go down, bottoming tail bar. And this is the picture, right? That's a picture of indecision and uncertainty for the moment, where it attempts to go up and it fails, it attempts to go down and it fails, it attempts to go up and it fails, and that's what's called the trading range. And as we look at a higher time frame, we see that it's in an uptrend and it's going sideways here and stalled. Which way is it going to go? Well, we're waiting. Doesn't break through these lows here, which opens up the door to an opportunity for intraday traders. But for swing traders, you're just sitting there waiting. Maybe if it breaks, I'm just pointing out the concept here. This could be a stock where you may decide, based on this analysis, if it was a stock, you might sell a covered call as a short term. Maybe that would expire at the end of the week or the next week. So different strategies. Maybe you don't want to sell, but you want to hold based on, hey, it's making new all-time highs. It looks great. So why would I want to sell it? But maybe I'll sell a call and lower my costs and take in some premium. So some ideas, always what we do here during this pre-market analysis, and of course in the room every day, is to offer education that you can take with you forever. Oil, drop. It was hanging here. So here's an example, somewhat of an example of what we were just looking at. I know this isn't at all-time highs. It's kind of a, against multiple time frames. This is moving up, this is moving down, and what have you. But it was going sideways here. As you could see, it was doing that up here, and then it gave it up, right? And then it entered what we call the void, and big drop. So when prices come into the void, that's where prices have the potential to move rapidly. And that's why we look for price structures that offer that. So now that it's at support, the momentum slows down, buyers begin to step up. Which way is it going to go here? I don't know. But the retracement here is relatively deep. It's not all the way down to the major support point. So maybe it chops around. Don't know at this point. Probably best to just stay away for a little while. Bonds are up here. They come down to support. They're rallying back up. They're probably going to get stuck here between these levels. And you can see as we're going through the multiple time frame analysis. Now, one of the things that I've trained myself to communicate with myself in a way is to ask questions to supportive of the method or the methodology of how I interpret price action. So if I'm looking at a time frame and I see prices begin to stall, a momentum slow down, or I see a big red bar like that, I ask myself, why is that happening? Is there a reason based on the method that I trade, my trading plan, which would tell me, go look to the left, Greg. Is this at the top of a trading range? Or, this is not a trading range, but is on a higher time frame, is it at the top of a range? Is it at an area of major resistance? Because this type of price action, there should be a reason for it based on the technicals. So I see where it's at, and I say, oh, that makes sense. But this is trending up. This is now in a sideways trend. It's holding this major support. It's chopping around. Could it recover miraculously after this drop? Sure. This is in a higher time frame. It's trending up. It's a little extended. So maybe it'll drop further, so it's a wait and see. In other words, here's another message, sit on your hands, go look for better opportunities somewhere else. And that's what we do. We look for where there's the relatively easy money. And, just based on the markets that we're reviewing here, pre-market, the futures, the equity markets, bonds, gold, and so on. The message is pretty universal that it's kind of choppy. You better be nimble. Don't get chopped up. Better opportunities are coming. And we look at gold, which we have. And we would have our bullish bias with this breakout, which we've covered multiple times above many years of resistance here. It's consolidating bullishly, and it's getting tighter. Now we're getting trading within tighter ranges or inside of bars. So the markets clearly are waiting for something. Could we be dealing with this to the end of the month with the decision on interest rates? Who knows? That's quite a distance away. But, the takeaway is either be nimble, sit on your hands, find opportunities where they line up the way we look for them, meaning, something just started, it's consolidating. That's a good setup that'll break out. And, that's what we look for every day. And the longer the markets chop around, well, typically it's more difficult to find those things until this indecision, right? This is another pattern of indecision until that indecision gets resolved. So there's different ways of visually looking at indecision. One of them is you can see these pivot highs and pivot lows that are marked there. Well, when you see swing highs and swing lows in opposition of each other in relatively close area, that's a picture of indecision. If you look at a chart where the moving averages, I've got 3 on here, 20, 50, and 200. But if you see the 20 and the 50 kind of intersecting through the middle of prices, and you've got pivot highs and pivot lows in opposition of each other, you've really got indecision and a mess. So it's a visual way of kind of keeping yourself in check, especially during these times where things are rather choppy, to say, this isn't a great opportunity here based on what you know of the past. So move on. We're all susceptible to, what I call mirage trading, and saying, oh, this looks like something because, we're getting bored. Well, that's not the picture I'm looking for. Let's go find a different picture. So during these choppy times, the pictures can become more difficult. So that's why we use scanners to look for certain setups like wide range bars breaking out, or just breakouts or breakdowns, and so on and so forth. And that's what we do every day. So that being said, we've got the bias that continues from the beginning of the week, and I'll let Dan take over. Oh, by the way, I'll be doing that presentation today at 2:00. If you are interested, there is if you're not signed up already, there's the link that you can do it. There's other people speaking, of course, all week. Something you might be interested in there if you look at their schedule.
All right, thanks. Yeah, and we'll keep the room open, of course, but I'll be over there watching it too, but I'll be here answering questions, just probably not talking. All right, opens, here we go. Weekly options trader, Charlie Papa put spread, and it's it's going to be gapping down most likely because of CSX. But we have both a put spread, the 240 that expires Friday, and we're also long stock. Beautiful gap breakout, just textbook. And I mean, Greg nailed the analysis on diamonds here, and that's exactly what I have in mind in terms of it's a bullish directional. We're long stock in our ETF trader, but if it loses momentum, then I'm going to consider selling a covered call on it. That's exactly what we do. That's our methodology. And you'll see a couple of them here in a minute. When, nice 4-day move there, topping tail, that might be one. Well, this one we only have a put spread. LVS, we're long stock, but that still looks great. That's not as extended. Remember when we were looking at these two and I liked LVS better for a swing? Facebook, I mentioned to Greg, it's holding up incredibly well in light of just the attacks on Congress. And I hear Maxine's going to be blabbing today, wanting to shut down their Libra. It was strong this morning, coming in a little bit, but we have a put spread and a covered call. Alta put spread for Friday looks great. I tightened the stop to Monday's low. Uber put spread. EWZ put spread expires Friday, and that looks fine. Swing and options trader. Old Fitch, we gave a put spread yesterday with this big old retest pattern. Now look, it's gapping over yesterday's high. That big old tail, very nice. Marriott long stock. Oscar Charlie, bull call debit spread. Looks great. KTOS, we just triggered at the high yesterday, but I said you can add over the high. It looks great, all time frames. JEC, we added yesterday, a breakout. FTC, broke out, coming in. Our stop is under this green bar. FCN, we're long stock, we're in trail mode. LVS and WIN I mentioned. Diamonds, we have a put spread in the swing letter for next week. MRK, long stock. I already tightened stop yesterday. NOC, now this is an example that I legged into a covered call because we bought the breakout and it immediately failed. So I leg into a covered call, lower the cost basis. Whiskey, long stock, we're in trail mode. Akamai, long stock, looks great. Costco, we still have 1/3 of a position. We're trailing. And yesterday, it held our stop by 4 cents. So we're still in a third. CMG put spread looks great. Cody, long stock. Whiskey Papa, long stock. We're in trail mode. RUN, long stock. It looks great. That was the bull flag. Finally, we got a nice engulfing close yesterday. And that's it. So we got pretty big inventory right now. Garmin, this came from McGraw. McGraw, I like this bottoming tail. I like this wide range igniting. I like the higher low on the weekly. You got a buy setup on the monthly. So I would love a 1, 2, 3. That would make that a no-brainer. PGR, I just saw it getting whacked pre-market. I don't know if it's earnings or something else. We'll come back to it. SWKS, not earnings, but I saw it up. Eric to the downside, almost 10%. That's ugly. Ooh, wow. Wow. 880 down here. Now, I don't know if this is in the middle of a take buyout, things. 69.55. This is a big old bullish gap. All these bears in here are now waking up with a headache, but there's no pattern for us. HLF 40.78. Bottoming pattern. So it's gapping pretty near these lows, but this is the bottoming pattern that hasn't turned yet. ABT 85.50. No pattern, but bullish gap. This is an ADR, 38 bucks. Gapping down here. I don't like ADRs. CMA 69.60. So it's a bearish gap, but to a lot of support. I haven't found a single tier 1 setup yet. Fran here. Look at all these people who got, sold into this acceleration lower. And now it's gapping up over $5. I don't know what the news is, and I don't care. But look at that death trend. Wow. Wow. If I had to guess, it would be maybe there's some rumors of a hedge fund wanting to buy them or some nonsense like that. But I would trade it the same. I don't even care what the news is. KNX, another transport. McGraw gave me, that was a beautiful entry yesterday on the 1, 2, 3 breakout. And I mentioned with CSX down, let's see if we can get some 1, 2, 3s on some of these transports. AVY, that's McGraw, that's one of yours. I like it. It's a deep retracement, so don't expect a new high. But for swing trade, I like it. This is a IPO. I'm waiting to open up. Elphus 166. Bearish gap. That one looks lower. Let's put that in the window. I wish it had more volume pre-market. OMC. Is this earnings? It's doing nothing. This poor Monk MNK looks like it's going out of business. It's a bio, so you got to be careful. But that's a bearish pattern, bearish gap. You got false breakouts under the 20, bearish weekly. That's an ugly chart right there. SGen 69.50. Oh, we looked at that already, I think. Hope. I can't tell where it's gapping, but I think that was earnings. Volt earnings, I can't tell where it's gapping. Interactive broker, no pattern. FNF 41.81. That one's not bad. That ain't bad. 41.81. We'll put it here. TXT gapping down 53 bucks. It's a mess. PGR we already saw. So yeah, that is earnings. CMA 69.60. We already have. Qualcomm's helping the semis, SMHs today. 78.70. So this is a nice put spread watch, McGraw. I don't know what the news is, and I don't care. Nuss is waking up with a big headache. Look at that. 30. Wow. Now look, wow, that's ugly. That's a big gap. We'll just come back to it. I have no idea where buyers are going to step up. I got no idea. USB is a mess. This was earnings. PNC, I think earnings, nothing. BK, a mess. I'm back. Was this earnings today? ABT, we looked at already. UAL earnings. It was up, now it's coming in. CTOS, 254. Wow, look at that gap to all-time highs, negating yesterday's red bar. Now, if this were gapping just to like 245, right over the high of this, then that would be a tier 1 setup. But now it's too big to be a tier 1. All right, here's our CSX getting whacked. No pattern, so I don't have many tier 1s today. MGM, I like this on all time frames. Let's let it stabilize. Miller Herman, this came from McGraw. I like this one, McGraw. Let's keep an eye on it. I like it. Okay, so good. A perfect timing. That was yesterday. Cyber.